Christian Bachelder, welcome to Mortgage Monday. How's it going?
Doing pretty good. Recording Christmas Eve here for y'all. So, David and I are always working no matter what.
Yes, we are. And it is early 2025. 2024 is over. And we're going to talk about why a housing market thaw never came in 2024. But before we do, let me ask you, Christian, how was your 2024?
It was good. It was, as you guys, I mean, probably here, depending on how much you follow the industry, many people in our industry struggled throughout this year, whether it was high rates, high prices. I think we had a record number of LOs who did not renew their licenses in 2024. The numbers are pretty shocking. You guys just want to search that up to see how much of the people in my industry got out. However, we're very fortunate here, because of you guys, the viewers. We have, still more business than we can handle. Obviously, helping our clients, helping everybody get into whether it's new housing or new investments or whatever we can, making numbers work. I gotta be, it's the Christmas season, it's holidays, so I just find myself having to be grateful for what we built and the products that we can offer to our clients for sure.
Yeah, it is a tough year, or was a tough year in real estate in general. Real estate agents are struggling. LOs that you mentioned, that's loan officers, a lot of them just said, screw it, I'm getting out of the business altogether. The insurance industry went completely haywire. I mean, have you ever seen anything like what we saw with insurance in 2024?
I have not. I mean, as you guys, some of the listeners may know, I'm a licensed insurance broker. I'm not currently producing and offering insurance. But David and I actually attempted for a brief period of time there to revamp our insurance services. And insurance is in a rough spot right now, especially in some of the locations that we do the primary amount of our business in, California, Florida, Texas, the Southeast. Man, insurance with these hurricanes and the fires and everything, the floods and everything that's been happening kind of across our whole country. Depending on where you live, you got to deal with a different natural disaster every other month, it feels like. But I have never seen the insurance sector in as much of a bind as it is in right now, David, for sure.
Yeah, and going into 2025, it's probably going to get worse. So I had to guess. I think inflation is just making everything expensive. There's no solutions that are being offered. Politically, we're just kind of in a weird place too as we record this. Like, Joe Biden is our president, but I can't remember the last thing that was even said. Like, I forget he's still there, right? Trump hasn't been sworn in yet, but we sort of think of him as the president, but he's not doing any presidential stuff because he's not our president. There's this like drone issue with these drones flying over New Jersey, and we're talking about it, but no one seems to have a plan. It just seems to be like the new normal is nobody really has a plan, and everybody just talks about it on YouTube. At least that's what I'm experiencing. Is it similar on
Pretty
your
much.
side?
Pretty much. It's definitely this drone stuff and the orbs and all these plasmoids and everything you're hearing is definitely interesting. Like what's going on? Is it us? And then you got the government saying there ain't nothing to worry about. It's like, well, you would think if you just woke up one day 10 years ago and there was all these crazy things flying all over your house, and you're telling somebody not to worry. Sounds a little sci-fi-ish, right? But
Yeah.
it's our world right now. And like you said, David, I think there's a lot of stuff, YouTube and everything, if obviously you search it out. But in a time where we don't really have answers otherwise, I guess at least there's conversations happening. But I'd like to see more solutions, both from our government and I've never loved the lame duck period where it seems like we have almost 3-4 months in between the election and when the president actually can start doing work. So that's always kind of tough. But it's the world we're in. We gotta deal with it, right?
So we sit firmly in that lame duck period as we try to figure out what to expect financially for 2025. And we're going to start off by talking about 2024 and why the market never really took off like some people thought that it did. So this article comes out of Yahoo Finance, and it starts off saying that Wall Street analysts had hoped the housing market would show signs of life in 24, but instead it remained stagnant. And the reason is largely tied to mortgage rates, according to this article. Bumpy path this year alongside low supply and record home prices led to a stagnant market. In January, the average 30-year fixed mortgage rate was hovering around 6.6%, according to Freddie Mac. And now, despite ups and downs, the rate is hovering around the same level. It was 6.72% in the week through Wednesday, compared with 6.6% a week earlier. Since the cost of borrowing hasn't gotten any cheaper, it hasn't triggered any significant movement in buying and selling activity. In fact, sales of previously owned homes are poised to set the record for the worst year since 1995. for the second year in a row. And I will say this lines up with what my experience has been. We have not seen home prices drop. I think a lot of people in our world tend to focus on two things: the price of the asset and the cash flow. That's what most conversations are had about. If rates go down, we think we're going to get more cash flow. If prices go up, we think we're going to get more equity. But you really need to pay attention to volume a lot more than people do. When transactions are not happening and homes aren't changing hands, wealth is not being created for almost anybody. It's really good that the value of homes has stayed where it's at for people that already own real estate. But if you're trying to get into it, you need new supply to be looking at. You need fixer uppers to be hitting the market so you can go in and put in some sweat equity. There has to be movement. If you've got a pond like the real estate market with no movement, you start to get bacteria growing in it. And that's kind of what we have. This quote from Jeff Tucker, the principal economist at Windermere, says, "I was thinking that this year we would see the housing market freeze begin to thaw and see some more activity, and it didn't quite pan out that way. The spike in rates followed a stronger than expected January jobs report and comments made by Fed Reserve Chair Jerome Powell in early February that the Fed would need to see more progress on inflation before bringing borrowing costs down. The Fed doesn't control mortgage rates, but its actions influence them through movements in bond yields." Everyone's sort of echoing the same sentiments that it's just kind of stuck. And I'm curious, Christian, what your advice is for someone who wants to get into real estate or wants to improve their portfolio in 2025 if we're operating under the assumption that there may not be a lot of movement in either direction.
Yeah. And I just to reiterate, I think there won't be. I'm on the line of people that I think it's going to be higher for longer. I know with different episodes and different news from the Fed and everything, there's been some days where it seems more optimistic than others. I think we're going to have to hold the course for a while. And we even did that episode a couple weeks back, David, with, the can Trump fire Powell and can he just, enforce his will, right? Be the wrecking ball that he can be. And I don't think he can. I think Trump's going to pound the desk for 2% rates again. I don't see it. I don't know how the economy could handle that right now. Unless we just stop caring about inflation and unemployment, which, I don't think is ever going to happen. But I mean, to answer your question, somebody who, maybe has a portfolio or is thinking about, starting to build one, maybe buying your first primary, starting our one house a year strategy that David talks so much about. I think the same advice that I've given on previous episodes, the numbers have to work now. Just as much as I'd say a year or two ago where rates started kicking up and we started maybe reaching that peak, and there were so many people that came out and said, marry the house, date the rate, and just get the asset and you can always refi later. Well, we're sitting here a year and a half later and you can't refi, and it's like, were you planning for that? Or did you buy a house with a year and a half sacrifice of your finances saying that, hey, I'll just refinance in a year? They're going to come down. They're going to come down. They're going to come down. And I think it's very possible that we could be sitting at the end of 2025 and there may not be a huge refinance opportunity. There may be some, there's going to be days, maybe we get into the mid to low sixes. But if right now, I mean, David just showed those rates, right? You can get some 6.75, let's say. If the rate's 6.25, it probably doesn't make sense to refi yet. You're not saving enough to justify the cost of the refi. Now I could be wrong and rates could plummet and, something could happen. And I hope they do. I hope we get some much needed, relief on interest rates. But I think if you're buying right now in this market, the numbers have to make sense with your financial position as they stand right now. Not in the future when you refi, not when you have equity where you can cash out, not when you can, drop that cost of borrowing, but are you able to comfortably afford the mortgage, cover the, collect the rents, whatever you're doing, you operate your Airbnb, whatever your strategy is, while you hold for a potential future period where, refi or dropping rates would make sense. Just don't get yourself in a position where you have to refinance for the deal to work. There's still deals out there. We represent hundreds of people every day. They're finding them, I promise. It's not just that there's not a deal. I think it's harder than it's been in a long time to find a deal, but they are still out there. We're representing investors finding them all the time in all different markets.
Mm-hmm. Yeah, and to the point you just made that you may not be able to refinance, I think that is a reflection of a lack of movement in the industry. When rates are going up and rates are going down, when prices are either ticking up or going up quickly, or maybe going down and then going back up, whenever there's like, I mean, they gave a good analogy. It's like iced over, it's frozen. It's very difficult to make money in real estate. When you have a little bit of undulations, there's a velocity in the movement of things. There is opportunity there, right? You need houses going into foreclosure. You need fixture upper opportunities coming on the market. You need prices to go up or interest rates to go up or down so that you could buy when rates were high and then refinance when rates come back down. And you could buy a house when prices were low and then sell it to somebody else when rates go up. And maybe that sorry. And maybe the person who bought the house that when prices went up also bought it when rates were a little higher, and then they get a break when rates come back down. But when nothing's moving, it's very difficult to make money in real estate. You sort of just have to wait it out. It turns into the slow marathon, which a lot of investors have not been looking forward to. They were looking for quick action. And so the question becomes to me, if you're not going to be able to make a lot of money in real estate, you're going to have to wait for a longer period of time. Well, where do you make progress? And in Pillars of Wealth, I talked about the three ways that you build wealth. It's offense, defense, and investing. If investing is not offering a lot of opportunities, you got to focus on cutting expenses and you got to focus on making more money. And there's some opportunities for personal growth there. But I do think we are in a season of this that you got to get out of thinking that there's quick money and you can go make it and there's gold in them dar hills and you got to hit the gold rush and get out there and get your shovel in the dirt and sort of settle into, no, I need a more predictable, reliable, I need to build a skill set. I need to start making some decisions with my life that are going to have long-term impact. And it's okay if you're not crushing it right away. And it's just a hard thing for us to sort of adapt to. Because in the last decade, you just heard about all these people making 100 grand in a month. I mean, is this something that you've been seeing as you're pre-approving people and you're dealing with different people that are coming to you for financing, and you're seeing people's incomes that are all over the place?
Yeah, 100%. And there's definitely a kind of a, you know, polarity forming, right? I talked about this in previous episode, but there's definitely a pivot more towards people with portfolios continuing to scale theirs, and a decrease in people starting portfolios, right? There's still, I mean, we're dealing with a first time home buyer right now, right? Buying in California. Um, they make really good money, right? So there's still opportunity, obviously, for people who have good income. But it's getting harder, right? The first time home buyers getting squeezed, I think, a lot harder than they have been before. And it's not impossible. You can combine incomes if you have a dual income household, or you buy with friends and you buy a multifamily. There's still a lot of creative solutions that people are utilizing. If you guys want to find solutions that work for you, reach out to us, right? We can run numbers. We can tell you what you qualify for. We can tell you how you can potentially increase your qualification buying a multifamily or something with an ADU, right? Or something where you can cut into that mortgage a little bit. There are still people doing that. There's just I feel really over the course of the last 2 years, right, since the COVID drop, there's been a push for more and more investors building their portfolio, which is a good and a bad thing, right? I mean, you want first time home buyers in the market. They have probably usually a little bit more pride of ownership. They
Mm-hmm.
increase the value of real estate. It's good to get first time home buyers in properties. I wish I was seeing it more. That's I guess my sentiment. I wish first time home buyers were using these creative solutions. David, you talked about in your books, sacrificing comfort right in your early years, right? In your 20s and your 30s.
Mm-hmm.
Do you need a big house? Do you need 4 bedrooms for you and your girlfriend? Probably not, right? I mean, maybe get, one side of a duplex or one unit in a triplex. Sacrifice, having a neighbor on the other end of your wall, and build that equity up. Have the other tenants pay a little bit of your mortgage. There's, I think, far too many people that aren't willing to sacrifice that in their earlier years. If you're 40 or 50, you probably don't want roommates at that point, right? But I think much more people need to have the mentality and the openness, for that, because that's really how you build wealth in your 20s and 30s. You make sacrifices, right?
Mm-hmm.
There's not a 20-year-old, I guess, outside of these streamers and influencers, but there's not a 20-year-old that's just living the luxury lifestyle that's just like made in the shade, right? Like that's not real. It's
Right.
the 20-year-olds that achieve wealth by 40, 50, 60 years old. They're probably sacrificing a little bit right now, right?
Everything you want to do well at, wealth, fitness, relationships, growth, it requires sacrifice.
Yeah.
And really, when you're sacrificing something, we say sacrifice, but you're really just diverting resources from one thing to another, right? You're sacrificing comfort to go work out, but you're gaining muscle and fitness. You're sacrificing selfishness to be in a healthy relationship, but you're gaining connection and partnership. You're sacrificing a life of ease when you try to build wealth and you invest your money into real estate or something like that, and you try to improve a property and improve its position and put your buoy in the water to benefit from inflation, but you're gaining something, right? Like sacrifice comes with gain. It's just half of the equation that we're referring to when we say the word sacrifice. And that's a great way for people to look at it going into 25 is don't just say, what are you going to do? Ask yourself, what are you going to give up? You're willing to give up your comfort? If you're not, that's okay. Just don't expect to be wealthy. Are you willing to give up selfishness? If you're not, that's okay. Just don't expect to have very many friendships. We live in a culture that is becoming increasingly narcissistic and egocentric. Everybody wants to be famous. I mean, we see this right now with the crazy amount of influencers that are kind of getting into the space. It's not so much in real estate. You see it sometimes, but everybody wants to be a YouTuber. Everybody wants to be famous. Everybody wants to be a little form of a movie star online. And I noticed this trend of people get into the space and they get super popular super quick, and in 18 months you never hear of them again. It's like the new thing is always going on, and these cycles are getting quicker and quicker. If somebody coming in, they're the new thing, everybody talks about it, then they're gone, and they just made a whole bunch of money when they were there selling you courses or dreams or education. And you've got this steady diet that people are getting from social media and from YouTube that you could have more. You don't have to sacrifice. There's an edge, there's a hack, there's a sneak, there's a backdoor. Yeah. There's a way that you can get in and do this. And you gave some really sound advice. Stop thinking that. There's not. This is really hard right now. You might be burning a lot of calories just to tread water in your portfolio. That's a part of the cycle too. It's not always just going to do better. And I think going into 2025, we should resign ourselves to a grind. It's going to be a knockdown, drag out fight. And if it's easier, great. Right. But wouldn't you agree that in your sports career, in any competition you were in, you always went into it expecting a battle? And then if you happen to get lucky and it was an easy one, like, cool, that's great. But you never want to walk into it expecting it's going to be easy.
Yeah, 100%. I mean, I remember, I played high school football. And we in high school, I don't know if you guys have heard the mercy rule. I think when you're up like 50-0, they just call the game in the third quarter. Mm-hmm. Right. And we were on the beneficial side of that a couple times. But of course, the coach is never going in saying, we're going to mercy rule these guys. The other team sucks. Right. Like, no, work your butt off. Let's do those, bear crawls and the gassers, we called them, where you go sideline to sideline real quick. Right. Obviously you still, you play as if you're going to play the Chiefs every year. Right. Or every game, I should say. So, it's the same thing in real estate, though. I think, that discipline, and maybe, a lot of listeners are hearing this and like, oh, this just sounds pretty standard advice, but it's in practice. I mean, really, David, you said there's no hack. The hack is your fundamentals, right? It's when you're getting bridge financing, right? We've talked about this a lot. You get better deals the more successes you have. So it's like the guy who has done 5 or 6 flips and maybe 2 of them haven't gone very well. He's getting a hack of getting a better bridge loan on his 5th deal. He's getting a hack of having to bring less money into the deal. He's getting a hack of working with a contractor that he has 4 flips done with now. Like, that's a hack, right? It's just do them more and try to be as successful as you can. And if you have a couple failures along the way, that's okay. But your hack is knowledge and the learning that you had.
That's
right?
Awesome. I love it.
It's not like the guy who has it. I mean, I can't tell you how many calls we have of people. Hey, I want one of those bridge loans where you finance 100% of my purchase and renovation. And it's like, I got a 500 credit score and I got no money. And it's like, you're looking, I get it, because you're told everywhere, relentless pursuit on these YouTubes, trying to get views and everything, that you can get anything. It's like, that loan product doesn't exist, brother. Like, I don't have some magic wave of the wand for you, but if you work really hard, save money, make more, spend less, like David says, defensive tactics in your finances, that could lead to you getting a hack on a bridge loan down the line, 100%. But you're not quite there yet, right? And that's where I'd like to see people spending more time and effort instead of looking for a hack. Master the fundamentals. It's like Kobe, Michael Jordan, these guys didn't have a hack. They didn't. No, they worked their butts off relentlessly, right? And they said, hey, I'm going to master a jump shot. It's like the most fundamental thing in basketball. Jump shot. I guess dribbling is more fundamental, but like dribbling and jump shot is like the most fundamental, things of, and they just said, I'm going to do 1,000 of them a day. There's no hack. There's no anything. It's just I'm gonna get
It's a
really
great
good at
point.
the fundamentals. You know.
It's a great point. Yeah, the goal for 2025 is to get better at what you're doing instead of looking for it to be easier. And if you are the person listening to this and you feel like you have been a follower, an acolyte of the cult of easy, you got to break those bonds. You got to break that connection. You got to stop thinking that way. You got to recognize that that was poison that you've been fed from people in the industry that were frankly taking your money and taking your attention in order to make themselves wealthy, and it's never been healthy. And now is a chance for us to correct and get back to, like you said, really good fundamentals. Christian, great stuff. If people want to reach out to you, get a pre-approved for a loan, talk shop, figure out what markets you think are good to be investing in, and get started in the process of investing in real estate. By the way, this is not only for investment properties. This is for people that just want to buy a house to live in, that have family members or friends or coworkers that want to buy a house, and you want to know they're not going to be ripped off. Where can they go?
100%. Yeah, our website's theonebrokerage.com. You can always find us there if you want to speak to me directly. At the One Broker on Instagram is where you can find me. That's an easy way. And then my email is just Christian at theonebrokerage.com. I said that quickly, but we'll put it down in the video description if you guys are looking to get in contact with me.
There you go. And keep an eye out for my new book, Better Than Cash Flow. It is available for pre-order on Amazon now, so you can look it up there and check out realtalkrealestate.com coming soon. All right, everybody. Thank you for listening. Hope you had a great 2024, a happy new year, and let's go crush it in 2025. We will see you next week on Mortgage Monday.